This is the daily chart of SPY, and what I want you to notice is how many times the S&P 500 has jumped down to the 50-day moving average. This is this orange line here, this 50-day moving average, and what happened each time. Each time so far that SPY has jumped back and recovered from the 50-day moving average, it led to a new all-time highs. We've had some fake outs here and there, of course, but it led to new all-time high. Bounce there, new all-time high. Bounce there, new all-time high. Bounce there, new all-time high. And this past week, we had it happen again, where it bounced from the 50-day moving average. Okay, so we're looking at this, and I see this area of liquidity. Remember, how do you find areas of liquidity? It's usually located above resistance. Okay, so we have this double top right here, right here. They stop at the same level. It's possible what happens again, or the market makers can just push past it, take out everyone's stop loss, and we have areas of liquidity here. So basically, an area of liquidity is where the retail traders would possibly set their stop loss. So if they entered at a resistant level, they would potentially set their stop loss above the resistant level. That's how you find areas of liquidity, guys. So I believe SPY will head back up here to the 438 to 443, 444 level. There's a lot of money for them to grab up here. Okay? So I'm confident that in this bull market, we will head to a new all-time high. But I do want to mention that there are some areas of imbalance. Okay? Have this area of imbalance here. We have this big area of imbalance here that you can see. Start from this wick, no wicks to the left, no wicks to the right. Same here. Now here, you have to go to a smaller time frame, and you will see it right here at the 4 hour. So SPY does have some reasons why it should come back down. And if it does, I will not get bearish in this bull market. I will look for buying opportunities. Now, if it violates any critical support levels, of course, we gotta watch and change our sentiment and be flexible along with the price action. Okay, so right now we have SPY trading above all our moving averages. Okay, and remember I said yesterday I want to see SPY above our moving average more than one day. So we got this day right here yesterday where it was above, first close above all our moving averages. Today it dipped a little to the 13-day moving average, which is our immediate support level right now. And it recovered and closed above all moving averages again. So that's a sign to me, a bullish sign that we will head up higher and we will take out these levels. Okay? So remember, the past 7 to 8 times the SPY has fell to the 50-day moving average and recovered, it led to a new all-time high in the SPY. I believe it will happen again. We have the VIX as well that inverses the SPY back below the 50-day moving average. The VIX below the 50-day moving average is a good sign that the SPY is heading in a bullish direction. However, it's still above the 20-day moving average. So there's still going to be some volatility and there's still some risk there for the bulls. But if we see VIX heading back below the 20-day moving average, it's a very, very good sign for SPY and for those that are bullish on SPY. So right now, because of the price action and what it's showing me, this 2 days in a row closing above all moving averages, I am bullish. We have areas of liquidity up here that's been building for weeks and months. I doubt they're just going to leave it there to sit. Okay? So bottom line, still bullish on the SPY. I have this 438 to 443 price target around the range. It's hard to call a top in a bull market, but I think we'll get around there. Okay, moving on to the triple Q. Triple Q after it fell below the 20-day moving average, has been recovering. This is a very, very strong recovery. We have another second day in a row where it's traded above all our moving averages. Of course, we have some imbalances here, and more likely than not, and more often than not, the imbalance get filled. But it doesn't mean it has to right away. We want to identify the best levels. If you are bearish, you don't want to just enter. You want to identify good levels to enter. So around here would be a good area. This is our area of liquidity. We have this setup, this double top setup. We could get a triple top where it comes back down, maybe head into the green area a little bit to trick us, and then, or it could possibly blow past it. Okay, so we'll see what happens. Remember, these imbalances, I am confident they will get filled, but they don't have to get filled right away. With the price action, I think we'll head up here first before we even come and touch these areas of imbalance. Okay, so because of the price action, just like SPY, because of the 2 days close above all moving averages, price action is telling me it wants to go up higher. So I'm gonna do what the boss says. Yes, the price action is the boss. Okay, so you know, look for good levels that you would enter. If triple Q comes back down and dip, I will look for it to fill this imbalance, and I'll maybe look to enter there. Maybe if it dips just below the 13 or the 5. And if it keeps on going, I'm not going to panic. I'll look to enter here and see if it'll fill this imbalance and then possibly head back up. Okay, we'll see. I like to, my favorite time to enter, or my favorite areas to enter, are these imbalances, or I use the moving averages, and I like to enter just below the moving averages. All right. So with this moving average heading into our imbalances, they're looking like juicy entries for me. Okay, but it doesn't mean it has to come back now. It could touch this first. All right, and this would be a good area, or a little higher, to bet to the downside. But then again, this is a strong bull market. I wouldn't bet to the downside. I'd rather be a bull in the bull market. Okay, so this is ARKK. I told you guys yesterday that I'm very bullish on the ARKK. It just came out of a major ABC correction that took us like months. Okay, correction lasts a while sometimes, and then it's possible that we have, one second, this impulse move, 1, 2, 3, 4, and then 5 wave to the upside. Let me move the moving averages. Okay, you can see it better. So I think that any dips from ARKK is buyable at this point. Okay, I had a very strong move from a few days ago all the way down from 112, 113, and then moved all the way up to 123. You know, that's over a $10 move. That's pretty big move. It's okay to cool down a little bit. It's still trading below the 20-day moving average. So that's our next resistance. I want to see ARKK get back above the 20-day moving average. So I want to see ARKK back above 124. And if we get 2 days in a row where it trades back above 124, it's a very good sign that we're going to head back higher. It doesn't mean that it will. Look, if you look here, we had 2 days of closes in a row, but then it dropped the next day on the third day. So we'll definitely be watching that. But 2 days in a row of closing above the 20-day, it's usually a good sign. Just look at that. You know, more often than not, it's a good sign that we're heading up higher. Okay, but there are cases like this case where it's not the case. Okay, so we'll definitely be watching it. We'll definitely be flexible. But like I said, I believe this is the fifth wave. We have a big gap up here around 142 for ARKK that you can see here. Okay, we do have an area of imbalance here around the 119 to 117 level. So that would be an area I would probably look to enter if I'm looking to enter, which is just below the 200-day moving average. That's also a good sign. ARKK closing 2 days in a row above the 200-day moving average. So tomorrow, definitely want to see it continue to hold above the 200-day and break the 20-day, which is above 124. So ARKK 124 is very bullish, especially if it stayed above that level for more than a few days. Okay, so bullish on ARKK, bullish on the SPY, bullish on the triple Q. But can I say that I'm bullish on Bitcoin though? Here is Bitcoin, still looking like it's following wick off. As you can see here, it's still trading below the 20-day moving average. Okay, not very bullish, bearish, as long as it's trading under the 20-day moving average. Just look, the 20-day moving average has been a tough ceiling for Bitcoin, and if it can break and close above that for more than 2 days, more than 1 day, that's a good bullish sign building, bullish strength. Okay, so we got this 20-day moving average as the resistance. We have areas of imbalance up in the green area, and especially here, and we have one that's all the way up here, which I believe will eventually get full. That's around 50,000 plus, but we're not there yet, so I don't want to talk about it. We still have this one that we need to fill. That's on the 4-hour, I believe. 1 second. Here, yep, you see it on the 4-hour right there. Okay, so I believe it'll eventually get filled. We had an area of imbalance right there, but just like that, it got filled. We have more areas of imbalance. Look at that. So I'm finding imbalances as we speak. I'll make it green. Yeah. Okay, so let's see. It's trading. Yeah, they got this 4-hour chart is back above the 50. It could come back, retrace, fill this imbalance, and then head back up to fill this area of liquidity or take out this area of imbalance. Okay, so short term, I'm a little bullish. I'm not gonna enter because I've already entered enough. But this was like over here though, and yesterday I picked up some Dogecoin at the lowest possible price I could, 16 to 17 cent range. But yeah, I'm not gonna pick up any more Bitcoin. But if you guys decide to, on the 4-hour chart, I would wait around 31 to 31K level to re-enter. If that holds, if it doesn't, could see more downside. So manage your risk properly. But I still see a lot of reasons why Bitcoin should head back up higher. Okay, but let me go back to the daily chart. But like I said, it's following wick off still. I have it in phase B. Now we didn't get this big move to the upside like the schematic predicted, but it doesn't have to be 100%. Okay, so I would look to enter Bitcoin, for me at least, once it starts breaking below. If it breaks below 28.7K, I'll enter around the 27 to 28K range. And if it doesn't, that's fine. I still have some, some coins left that I entered around here. I'll just continue to hold and ride it up. But if it does come down, I'm definitely going to accumulate more. Okay, so right now it's still trading below the 20-day, so of course I'm just gonna be bearish on it. But if we see it above the 20-day, it's showing some bullish signs. Gets back above the 50-day, now it's getting bullish strength is really building. Maybe fill out this area of imbalance, and we'll see where it goes from there. But unless these critical resistant levels start getting broken, I'm still bearish on Bitcoin for now. And I'll be patiently waiting to accumulate when it gets down to this level. All right, guys. So I hope this technical analysis was able to be of service and bring some value and help you on your trading journey. I hope you was able to gain something and learn something, whatever it is. Definitely feel free to comment below any questions. I will answer them. Join our Facebook. The link is in the description. And thanks for watching. Continue to beat this market, and I'll see you soon.